Hi guys, so in this video I'll be showing you guys how I was able to make $2,000 in 1 hour using ICT SMART Money concept, right? So before we go right into the chart, I would like to show you guys the proof that I actually did this thing, right? While my charts load up, let me just quickly pull up the screenshot and show you guys, right? So let me quickly show you guys the screenshot of it. This is it. This was before I took the trade. I think you see where I set my limit. I see my limit was at 25 lots trade, and you can see where my stop loss was at. All right, you can see where the stop loss was at, and you can see the time stamp was on. You can see the dates. All right, you can see it was actually on the 11th of May. All right, you can see the time stamp. You can see the time in my local time was in Nigerian time, GMT +1. You can see when I was about to get involved in the trade, and this is it. Then let me show you the profit. This should be the profit. All right, so let me show you guys the profit. New share. Let me show you guys the profits. All right, so this is the profit. Right, so you can see the profits. All right, so this is the profit of the trade. Right? You can see $5,000. You can see the same time, 11th of May. You can see it was actually 1:4 trader, but 1:3 constancy. So you can see that I actually got involved, and you can see the profit. You can see everything. All right, and this was actually on the funded accounts, challenge accounts, rather. So that's, I think I've showed you guys there. So then I go into the chart breakdown. All right, so I was able to use smart money concept to make all of that, right? Now, I want you guys to understand something, that making money in the financial market is not a function of how long you can hold trades, right? Or a function of how little you can hold trades. There are people that are scalping and making a lot of money. And there are people that are also swing traders that still make a lot of money, right? The first thing you must understand is that you must understand the kind of person you are, right? You judge your patience level and your life circumstances, right? So that should determine the kind of trader you should be, because you can see my trade was actually on the 5 minute chart, right? So you have to understand the kind of trader you want to be, and then frame your trading based on that. So if you're someone that is very patient, then you might likely want to go for what um 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 longer, higher time frames, right? If you're a person that likes action like me, I really love action, right? So I prefer to go with what the intraday approach of trading, right? So I'm looking for 1:3, 1:4, and all that. So one thing you should know, that your profit is not really what matters, right? It's your RR, right? So as long as you're risking less and making more, whether you're a scalper, whether you're a swing trader, as long as what you're making is more than what you're risking, then you're good to go, right? So it doesn't really matter the time frame you're trading or how long you're holding your trades. What matters is how you manage your risk and all of that. So let's go to the chart breakdown of how I was able to catch that $2,000 trade in 1 hour, right? It's literally 1 hour. I just 1 hour candle did it for me, right? So first things first, you go to the daily time frame. So it's happened on the 11th, right? So I've taken this is the candle you're looking at, this particular candle. Look at this particular candle. I don't want to use the replay button. So look at this particular candle, yeah, this one. And so this was the day I caused the trade on 11th, all right? So first things first, look at the higher time frame, right? I'll go to the weekly first. So on the weekly time frame, you can see that there was a liquidity I was targeting here. This liquidity was just up here. You can see that we have breached through this weekly liquidity, right? And in the process of that, we have tapped into what this liquidity void here, right? So I have a liquidity void inside there, right? The liquidity void is running from here. This is a liquidity void from here up to here. So I have a liquidity void all around there. So we took out this liquidity, this weekly liquidity, and then we tapped into what this. And then if you check the seasonal tendencies for the US dollars, we're actually in a bullish period, right? During the May period, you can expect bullish price action on the US dollars. So if the US dollar is bullish, that means GBP USD will be what bearish, right? So I still expect further lower price action to maybe somewhere around there, right? If I see price drop maybe somewhere around this point here, right? I see price drop somewhere around there, but we hit this fair value gap. All right, so we might see price drop for this in the long run, right? So it's not compulsory. We might see price do just drop for that low, drop for that point, right? So I'm looking at maybe price might drop to this point, right? So let us look at the discount. So if you're bringing out your Fibonacci 2 from here to here. My C price, just want to give us, so my C price come at least 50%, so somewhere around there, 50% of this. And so we're setting bearish price action based on the weekly, and then we came to the daily time frame to see what is happening on the daily time frame. So this was a candle that took out as liquidity. It took the liquidity on the 10th, right? So when I saw this market can take a liquidity, I was like, okay, it's time to go short, right? If you watch my previous video, I told you guys how that you should expect what distributions or breakups above previous highs, right? Watch my previous video on market structure, right? I talked about so the break of structure, right? I'll be posting the you will see the how do I put it, the video recommendation right about now. You've seen it. I'll be posting it right about now, so you can see the video I'm talking about. So on the daily, we took our liquidity, and then the person was priced to remain bullish, right? Now, let us understand something. When the market is bearish, now let's look at the structure of the D1 candle. If your market is bearish, you should expect price to do what? So this is now ICT concept, right? So you expect price to do what? To rally higher before dropping lower. So you expect the price to do what? Look at all your bearish candles. You expect market to do what? To rally higher before they was dropping lower from what is lower on the daily time frame, right? So that means you should, if you're bearish, always expect the market to give what a false rally to the upside before they was going down. That was what happened on Monday, right? I was waiting for price to do so on the lower time frame. I simply went to the first of all, let's go to the 4 hour. All right, so in 4 hour, look at the 4 hour time frame very carefully. Look at the 4 hour here. We had what? We saw the markets make this high, make this low, make this high, and then we had market violate was this swing low, right? So this swing low gave me what? My break of structure. So there was a break of structure inside it, right? This was like break of structure. My market taking out this swing low, right? So when market took out this swing low, I was looking at what this last up move before the break was structured. So we had this last up move. So I'm looking at the lower wick because on the lower time frame, it's actually what one candle, right? So we had this lower wick here. And had this lower wick. All right. So if you go to the 1 hour, you will see very carefully. There's only a bullish order block, right? So there was a bullish order block. So we can define it was this candle, right? So we had this bullish order block here, right? So that was what I was looking at. So now remember the power of three. Market should rally above midnight before they were dropping lower, all right? So all this happened on the 11th. So let's go to the 11th now. Remember your time should be at New York time, right? Remember your time zone should be set at what? New York, right? So this is the New York time zone. So that's what I'm looking at. So I'm looking at the midnight of 11th. So I take my time now to the midnight of 11th, right? The 11th. So yeah, this is midnight of 11th. So somewhere around there. So you can go to the lower time frame on the 11th, right? You can go to the lower time frame on the 11th. All right. So now we're on the lower time frame of the 11th. So what do we see here? All right. So on the look at the level, this is 11th now. What can you see? Can you see how price rally? I told you what something on the D1 that she said when market is poised to go lower, market should rally above, creating the upper way before it was going down. That is the power of three, the ICT power of three, right? So did we have that? Yes. So we had price it was open. Did you rally higher? Yes, it did. And then it broke down, right? Although I didn't catch this rundown, what did I wait for? I waited for what? The New York session, right? So the New York Q zone is between what 7 o'clock to 10 o'clock. So this is the New York Q zone between 7 o'clock to 10 o'clock. So we had this London rally, creating was the high of the day. And then this gave us an indication that this market was likely to do was to go lower, right? So we had this London high form during the Q zone. Q zone is between 2 o'clock to 5 o'clock. That's the London Q zone between 2 o'clock to 5 o'clock. So that's 2 o'clock here, right, to 5 o'clock. So this was the London Q zone. So this what happened in the London Q zone, this time window here, right? So we had this happen in the London Q zone. I think I should make this a little bit thick. Let's make this orange. No, let's make it red back. Let's make it a bit thicker and so you can see it clearly. All right. So this was the London Q zone hour. So then during the New York Q zone, that's why I got my entry because if the market is poised to go lower, London should form the high of the day, and then you see a retracement into optimal trade entry during what the New York Q zone, and then you take price lower. So let us look out for the New York Q zone. It was between 7 to 10. That is the New York Q zone. So sorry, between 7 to 10. So we have the 7 o'clock time here. So 7 is somewhere around there to 10. So you can say this happened in what? The New York Q zone, right? And then if you bring out your Fibonacci tool, you can see that we actually hit what? The optimal trade entry. So if you draw from swinger to single, you can see that price came what? To the what? the 62. It even went to the 79, 0.70, because that's a sweet spot, the Q zone, right? So that we thought that with OTE. So you have actually paid your entry at maybe 62% with your stop loss above, or then you use my confirmation. So how did I get my limit? I was looking at this chart, and then what did I say? I saw that markets gave what a break of structure during what the Q zone, right? So what do we see here? We saw what the markets create what a high. Sorry. So the markets create a high and then a low. You look at what the close prices, right? You can see the market clearly close above this high. That is also a higher high. Look at the close prices. You can see the market made a high, made a low, made a new high. I'm not using the wicks, right? I'm not looking at the wicks. I'm looking at what the candles. So the market closed above the previous high. Inside where that's where our 1 hour order block. Remember our 1 hour order block. I hope you're not forgetting that. So we're still in that 1 hour order block, right? So we are still in that 1 hour order block. So you can see we're seeing that 1 hour order block. All this happened was in the 1 hour order block, right? So after markets broke and came in, this one didn't happen, right? That's the context to this, right? So don't forget that. So when the market did that, we simply stripped down to back out our 5 minutes time frame. Sorry, I think I should just put it back to where we were. So that was on the 11th. Sorry. So markets came to that order block. What do we have here? So we had what markets take out this swing low, closing below it. So this low was violated, and then when markets violated it, so we had what an order block. We saw price trading away very impulsively from what this up candle here, right? So that was actually my entry. This last up candle, right? You can see based on the screenshot I showed you guys that I need to go to the screenshot again. So that was actually my entry here, dealing with the Q zone. So my entry was there. My stop was also a bit above it. So short was just at the open of this candle, so around there. That was my limit, and then stop loss was above this high, right? So it's above this high. It's a bit above this high. And then I was targeting was this low for my take profits. I was targeting this low, this London low. That was also my take profits. I was targeting this low for my take profits here. Sorry. So I was targeting this low for my take profits here. That was my take profits here. So actually 1:4 trade, right? So actually 1:4. So just below this low a bit. That's why I was targeting a bit below this low. So that was my targets on this trade, just below that low. All right. So I hope this video was insightful. Do want to join my Telegram community for more free content and more of our. We usually have free classes on Telegram. And if you want to be part of our paid mentorship group, where I break down all these things, price and time, all these things in details, do want to join with the link in the description. It's just a yearly subscription fee of $58, right? So it's very affordable. You can do it to join us. So I hope this video was it actually tickled your fancy. You must use time to know when to strike, and then you must know the concept from the top-down perspective, all right? So that was actually my trade on GBP and how I was able to capture what $2,000 in literally 1 hour. So if you measure from here to you can see it's actually 1 hour. So I got admitted somewhere around there. I can see from here to TP was what, about 45 minutes. So it's not even up to an hour, about 45 minutes. That's how I made $2,000 on my challenge account. All right. So I hope this was insightful. I see you guys in the next video. Have a wonderful day.